Joining us right now is Potomac Wealth Advisors President and Founder Mark Avallone. Mark, good to see you. Thanks so much for joining us.
Good to be here.
We're talking about 2.5 weeks left in the year. What drives markets at this point? We've got USMCA likely to come to the floor for a vote in the House anyway, this week or next. And then, of course, that China deadline. How important are these issues for markets?
Well, USMCA will have a positive long-term economic impact for the country and the region. I think the impacts of those are already priced into stocks. The bigger impact, and you're seeing it in the move up in the VIX yesterday, is the uncertainty with the China trade deal this week. It's either a yes or a no. We're either going to go forward with or without tariffs, and I think that's undermining the otherwise strong economic situation here at home. So right now, it's mostly about China trade.
What are you hearing, Jack, in terms of what 2020 looks like? You had a good panel this weekend on the Barron's program, Barron's Roundtable.
That's funny. I was going to ask Mark Avallone what he sees out there, what his client sees. But yes, trade is a big issue. Like, everything is pretty good with that exception. The J.P. Morgan 2020 outlook just came out, and they said this political uncertainty is hanging over it. And I do want to point out the dichotomy here, because we're always telling investors, don't worry about the day-to-day tweets and everything else. There's no way, I mean, unless you're trading 300 trades a day, you're going to stay ahead of that, and even then you're probably going to lose. But that said, this is real, and this is affecting people. I mean, Barron's yesterday called this possible new tariff round reverse Black Friday, because it's going to hit consumer goods. Now, my suspicion is that they won't be able to pass it on, that the companies will take the hit, but still, it is not good for the economy. And if you could just get rid of solve the trade problem right now, you'd see a huge bump. That would be like a new tax cut, a huge bump in the markets.
Yeah, I'd be interested in getting Mark's opinion. I mean, if you look at the Journal, you can't pick it up without yesterday's article saying, the individual investors are pulling back from stocks. You see some of the big family offices like Michael Dell pulling away from funds and picking stock. Mark, what do we tell the average investor to do?
Well, there's a lot of money been made, and a lot of folks are taking some risk off the table. I think that's one of the drivers. They're saying, how much further can we go with valuations at these elevated levels and so much uncertainty? Remember, these tariffs just don't impact the price of a product at Target or Walmart. It impacts CapEx decisions and the underlying fundamentals that drive the economy. And that's what's been slowing down. A little bit of the manufacturing slowdown, a lot of the CapEx slowdown is this trade overhang. It's not just if there's a 10% tax, it's impacting decisions, and then it's impacting global economies. That's why the European markets have been weak. Even though it's a U.S.-China trade dispute, it's impacting global economies around the world, and that's the overhang right now.
I would say that the USMCA might counter that a little bit. I think this is good news that we do have a deal out there on the table. Looks like it will be passed. At least that says the U.S. can make a trade deal and will agree to terms, and so that's positive.
Mark, how do you want to be invested going into year-end?
Well, USMCA is going to counter that. The Fed has been accommodating that. I think people should look for corrections in this, what's going to be a volatile market. I think the trend is still up. You still have a good earnings outlook for 2020. You still have an accommodative Fed, and you have a pragmatic politician in Washington who doesn't want to blow up the China trade in 2020. So I think you'll have opportunities. They may come after some short-term market pain. Those would be entry points.
What do you make of the VIX index, considered that fear gauge, up 16% yesterday? People were watching this move in. Typically, the VIX and the S&P move in opposite directions, but both have been moving in the same direction for the last 2 weeks. Mark, what do you make of that? Is that a sign that more volatility is coming?
Well, yeah, when the VIX and the S&P move in tandem for several weeks like they have just recently, that's usually a sign that there's trouble ahead, because investors have gotten a little bit too complacent. And the spike up yesterday might be a reset because of all the uncertainty, as nobody knows what's really going to happen with this trade dispute. No one knows what's in the mind of the president. So think about it from an investment standpoint. You might want to take some risk off the table, and the VIX is a great hedge for that.
All right, we will leave it there. Mark, it's great to see you this morning. Thanks so much.